Well, China stocks may be looking at a 20% rise from a full reopening, according to estimates from Goldman Sachs. But the firm is noting that the actual reopening is still months away. Let's bring in Yahoo Finance's Ines Ferré with the details. And Ines, as Dan was saying, the zero COVID policy has had so many different effects. Apple not the only company, but potential silver lining down the line here.
Yeah, that's right. Well, Goldman analysts are saying that the reopening could happen in the second quarter of 2023, basically saying that China will likely stick to its zero COVID policy for the time being, citing vaccinations in the older population, that those are still low. Also saying that the death rate for those who are fully unvaccinated, that remains high. Now, we did see that Chinese ADRs last week saw a bump. This is the Golden Dragon Index components. I'm going to pull up a 5-day chart here so you can see the movement over the last 5 trading sessions. And this was on hopes that China was perhaps moving towards reopening. Now, over the weekend, those hopes were a little bit dampened because you did have Chinese officials basically reiterating their position of what they call dynamic clearing, a dynamic clearing approach when it comes to COVID. Now, this morning, the Wall Street Journal is reporting that China could be moving towards a reopening. There's still not a timeline yet for that. So there's a little bit of mixed messaging coming out of China. But I will say that apart from these Goldman analysts, you do have some other analysts that are also reiterating that this could take some time, especially as we go into the winter months, because we will be seeing more infections for COVID over the winter months. So perhaps it could be sometime next year when China reopens, according to some analysts. Akiko?
Okay. A lot of people hoping for spring, as you said. Inez, thanks so much for that.